The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Paxos, the crypto infrastructure firm behind PayPal and other services, revealing a breakdown of the reserves backing its stablecoins Pax and BUSD for the first time. Some 96% of the reserves were held in cash and cash equivalents, while 4% were invested in U.S. Treasury bills as of June 30th. Joining us now is Paxos Chief Compliance Officer and General Counsel Dan Bernstein. Welcome to the show, Dan. Curious off the bat, why did Paxos feel a need at this time to make these disclosures?
Well, thank you for having me back. I appreciate being here. The important thing right now is that there's a lot of discussion at this point on stablecoins and stablecoin reserves. There's a regulatory discussion that's going on in Washington that's really important. And there was the announcement the day before yesterday about Circle's reserves. And so that's important for the timing here, and the sort of fever pitch of discussion is makes it relevant to release this.
Makes sense. You guys want to develop trust, and regulators are increasingly, policymakers are increasingly talking about it. So you have 96% cash and cash equivalents, 4% in U.S. Treasury bills. Compare that to Tether, the largest stablecoin issuer, with about 2/3 of their reserves in commercial paper. Why is Paxos not holding it in commercial paper?
Sure. Well, let's just break down what a stablecoin is. I know your watchers and viewers are sophisticated here, but a stablecoin at its essence, and a dollar-backed stablecoin in particular, is a digital token that is backed by a dollar. It sounds simple enough, but what that means is when a user, when a customer sends Paxos $1, we issue them one Pax token or one BUSD token, which is a stablecoin. They then expect us to hold that dollar and to keep it in a very safe, liquid, accessible asset in order to be able to honor a redemption for whenever that stablecoin comes back to us. We're going to give them that dollar back. And that's the most important thing to know. That's the most important thing about a stablecoin, is that that dollar is going to be there at the end of the day. And so when you compare Paxos and our reserves that are strictly in cash or very short maturity U.S. Treasury bills, that means that those dollars are extremely liquid. And you compare that to another so-called stablecoin, whether it's Tether or USDC, that's backed by a basket of assets. Is that really a stablecoin if it's not really backed by a dollar?
So, Dan, what would you call them, first of all? Second of all, obviously they're competitors of yours, but putting on a regulatory hat, if you will, what do you think regulators are doing right now when they look at USDC's balance sheet? You flagged, for instance, the idea that maybe USDC might be viewing the tokens as a form of liability or some sort of property. What are the regulators doing right now as they look at this? What do you think is going through their heads?
Sure. Well, it's a good question, Lawrence. And regulators are not just one thing. And there are different baskets of regulators. And there are prudential regulators, like Paxos is a New York State registered and licensed and chartered trust company since 2015. A trust company has bank-like supervision and is chartered by the New York State Department of Financial Services. It also means that all of our products and services are regulated and are overseen by our regulator. And the prudential regulator is looking for a few things, including safety and soundness of the financial system and consumer protection. And they're looking at things that are not just the good times, but the bad times. What happens if there's a run on the asset? What happens if there is a massive amount of redemptions? Are those dollars going to be there? And so prudential regulators are certainly going to be looking at reserves and saying, are those going to be able to be liquidated at par on a very short-term basis in an adverse scenario? On the other hand, there are also securities regulators, and we saw yesterday some comments from Chairman Gensler at the SEC about looking at the assets that underlie stable coins and so-called stable coins. And we are seeing that I think we're going to see more attention to this space.
So there's been a lot of talk recently about like this kind of potential stablecoin apocalypse, right? Where like we find out that these stablecoins are not backed as they say they are, and how this could affect the crypto markets and even lead into just like wider financial markets. I was wondering if you could just sort of like game this out for us. Like what's the worst thing that could actually happen, and like how would that happen? Because I think it would be good for viewers to sort of visualize what can happen if these stablecoins are not backed as they appear to be.
Sure, and it's not my intention to be the sky is falling kind of person, but that's what regulation is, and that's what financial regulators need to look at and are looking at is the worst case scenario, the adverse scenario, and the different likelihoods of those scenarios, and then assessing risk. When you have tokens that are not regulated, that means that there are no regulators who are looking at that and who are not looking out for those worst case scenarios. But the worst case scenario, I think, is clearly a run on assets. If there's a run on redemptions and they're in an adverse economy, for example, and especially if there's a lack of confidence in the token, which could certainly happen at any time. What you could see is a fire sale of the underlying assets, and if those assets are held in illiquid assets or risky assets, then those might not be able to be sold for $1, and those tokens are then going to be under reserved. They're going to break the buck, and they're not really entitled to the name of stablecoins.
But what could happen? Like, how would that bleed into the financial markets? In that scenario?
Certainly, and this is not necessarily my area of expertise, but if you're holding a token that you believe to be worth $1, and then it is not worth $1, and you can't get $1 for it, then that can have multiple adverse effects in terms of various financial markets that use stablecoins.
So Dan, you mentioned BUSD. That's of course Binance USD, and SBF was on just before talking about on ramps for Tether users in China buying Tether potentially off, using those exchanges. So have you talked to Binance and said, look, Tether's on the exchange. Why are you guys using them and not just solely us? I mean, has Paxos talked to Binance about potentially even delisting Tether, or any concerns, given especially what's happening to Binance now all over the globe?
Sure. We haven't talked to Binance about this. What we have seen is that Binance is an important partner for us on BUSD. In the case of BUSD, which is the Binance dollar, Paxos is the financial services provider. We have this as a regulated token approved by the New York Department of Financial Services, the same as Pax. Binance is a white label partner and is our branding and marketing partner. We value the relationship with Binance, and they of course have a much broader business than just BUSD. But I do note that CZ posted a tweet last night talking about BUSD and talking about the importance of stable reserves. And I think, as with all market participants, Binance can and should be looking at the stability of those reserves and whether Tether and USDC should and could be called stablecoins.
Is there any risk that the regulatory scrutiny that Binance is under could affect the success of BUSD?
I don't think so. I mean, I think that we believe that Binance has a strong way forward. Binance, as I said, is an important partner to us and has committed to resolving some of their legacy issues. But we have a lot of confidence in Binance's ability to get past what's a wide perception that they have some legacy issues, and to move forward in a really constructive manner.
So Dan, obviously commercial paper, the two words that everyone's talking about now in stablecoins. Where do you think, given some of the answers that Tether has given in the past 24 hours to, for instance, CNBC about where their commercial paper is and isn't, where do you suppose that it is? What have you guys heard? And in terms of Circle, do you think that they hold more commercial paper in what they're counting as cash and cash equivalents than they're letting on?
Well, I haven't seen the breakdown or what's behind the scenes. I think what we did hear from the Tether executives yesterday is that their commercial paper is being held in a non-transparent way. And in Circle, if there are certain categories of funds in those cash and cash equivalents category that are not being transparently disclosed, then I think we would like to see that transparency. But transparency is not enough here. Lawrence, if you tell me that you steal a car, it's great that you were being transparent, but it doesn't absolve you of the underlying activity.
What are you saying,
Dan? And so what I'm saying is that the substance of the disclosure is important, and what's important is for a stablecoin to be one-to-one backed by actual dollars in order to be a dollar-backed stablecoin, and to be regulated so that there's somebody looking over your shoulder to verify to consumers and verify to the community that that one-to-one backing is there, and that there are resolution plans, and that the token is being governed and managed in a way that's extremely responsible.
Dan?
Just one quick question. Do you think the Fed is going to issue a digital dollar, and do you think that's a good idea?
Yes and yes, although it depends on what it looks like. I think there are a lot of different ways to do a digital dollar, account-based or token-based, and distributed through private networks or through the public. And I think there's a lot of design decisions that are going to make for an interesting conversation in the months and years to come.